Welcome back, you legends. Dr. Cal here, and let's get right into this video. All three major indices closed somewhat flat today. On the S&P 500 map, we have a few pockets of green and a clear pocket of red right here. Energy was the worst performing sector for the day. Healthcare was the best performing for the day. And big cap tech companies like Microsoft, Apple, Facebook and Amazon closed in the green, with Google closing flat and Tesla closing 1.8 percentage points in the red today, while semiconductors closed deep in the red. Sector performance today was typical of a risk-off day. Leading the pack was healthcare and consumer defensive. Communication services closed flat today, and the laggards were energy, leading the losers by 2.6%. And then we have basic materials, real estate, industrials, financials, and cyclicals also closing in the red today. Now let's jump into the daily chart of the S&P 500. Not much action today, guys. We closed really close to yesterday's closing price of $380. We had somewhat of a narrow range candle right here. We wicked through the gap that we had from last week and then reversed most of that move to the upside, closing flat at the end of the day. In terms of momentum, actually on the MACD, we are still positive, so the momentum is still in favor of the bulls. On the smaller time frames, we have somewhat of a different picture. We can see here that the price action has undercut the 50-period moving average on the hourly chart and was not able to overtake it. We overtook it briefly and then came back down in what looks to me like a bear flag, guys. So a full measured move on this bear flag from the top to the bottom would probably take us all the way down to about $370 on the S&P 500, which actually makes perfect sense because we have this gap right over here that we are likely to see the price action fill if we see the bears take over tomorrow. Remember, guys, tomorrow we have inflation data coming in, so expect a lot of volatility. If inflation figures turn out to be much higher than expected, then I would fully expect the stock market to realize this move to the downside. If, on the other hand, inflation turns out to be much lower than expected, we might see the stock market attempt to close this gap right here at $400. So it could go either way, honestly, guys. And in fact, the risk is probably equal to either side, to either the upside or the downside. Now let's jump into the Qs. Same thing here, guys. The NASDAQ closed pretty much flat on the day. Momentum is still positive on the MACD, but that could quickly change depending on what comes out tomorrow. Again, a full measured move from the top to the bottom would take us all the way down to test the lows again at about $270 on the Qs. In terms of upside, we probably have about the same risk to reward on the upside as well in case the PCE comes out lower than expected. So all eyes are going to be on that personal consumption expenditures figure coming out tomorrow. Now let's take a look at the daily chart for the Russell 2000. The Russell 2000 actually underperformed the market today, which is not too surprising because we outperformed the market yesterday. So we had a lot more work to do this time to fill the gap right here all the way at $170, and we did that today. Again, momentum on the MACD is still positive. So again, this could go either way. Now let's jump into the VIX. The VIX actually saw somewhat of a pullback today, but we are still hovering at the highs of yesterday's close, which makes sense because if you think about it, the VIX pretty much performs like the inverse of the S&P 500. On the smaller time frames, we still have positive momentum in the VIX on the 2-hour chart, so we could still see a spike to the upside, guys. Again, all depending on what happens tomorrow. We remain above the breakout level that we saw outside of this descending wedge that I drew out last week, and as long as we remain above this level right here at 28 on the VIX, the door remains open for significant upside in the VIX and significant downside in the stock market. Jumping over to the daily chart of the 10-year yield, today we ended up taking back all of the gains that we saw from the last couple of days, which is a very good sign for the stock market, in fact, because it was this jump in the 10-year yield that led to the sell-off that we had the last couple of days. And in fact, we have this absolutely beautiful evening star pattern where we shot up to the upside. Then we had an indecision candle right here, and then we completely reversed the price action of the previous 2 days. So this is an extremely bearish candlestick pattern, and it's very significant because it occurred at the 50-period moving average for the daily chart. This is an indication by the market that it actually believes that inflation has probably topped out and will start significantly going down in the coming months. This is very good news for the stock market because as inflation eases, the Fed could also start easing off those rate hikes that have clobbered the stock market. So all in all, this is actually a bullish development for the stock market. And again, the momentum remains negative for the 10-year yield. In terms of a target on the 10-year yield, we could expect it to go all the way down to 2.75, and a decline this big in the 10-year yield could in fact lead to a very significant rally in the stock market, specifically in high valuation, high growth areas of the stock market that have seen the biggest losses since the Fed started becoming hawkish back in January of this year. Now jumping over to the daily chart for Tesla, we in fact have this beautiful reversal candle. A reversal candle, guys, is a candle with a narrow body like this and a long wick. The reversal usually occurs to the opposite side of the wick because the wick usually indicates a rejection of the price. So Tesla came all the way down to $670, and then we saw a rejection at the 670 level and we closed at 685, which means that if the inflation report tomorrow is favorable to the market, this would be an absolutely beautiful launching pad to send Tesla significantly higher from here. Again, we have this beautiful gap right here at the $860 level that we could see Tesla fill in the coming weeks in case the stock market turns bullish. And we have an even higher target all the way here at the $1,000 level, tagging this trend line that we've seen several reactions to going all the way back to November of last year and into April of this year. Now let's take a look at Apple. This is a daily chart of Apple. Yesterday we had a rejection of this trend line going all the way back to April. And again, if the market turns bullish tomorrow off the heels of that inflation report, and we see a break of this trend line, this could send Apple all the way to the $155 level right here. Now, in terms of downside for the bears, we could see Apple test the lower lows again at the $130 level. Again, depending on what happens tomorrow. Momentum remains positive on the MACD with a double bottom with a higher low. So everyone is going to be watching really closely for Apple to break through this trend line for a nice move to the upside that will probably take us about 10% up. Now let's jump into Nvidia, guys. This is a daily chart of Nvidia, and I am absolutely in love with this chart. This is a beautiful looking chart for investors and even swing traders with a longer time horizon. Why? Because we had this multiple bottoming formation on Nvidia with positive momentum on the MACD. We've been making higher lows on the MACD now consistently. Even though price has been moving sideways, the momentum has been very positive, and we have all of this white space right here to the upside. So this is a lot of upside potential. And again, we have this gap right here at the $230 level that Nvidia could easily go into if we see the market turn bullish again. So I absolutely love this chart, and even on the smaller time frames, Nvidia has consistently made higher lows. So despite the price being significantly lower today than it was last week, the momentum is actually significantly more positive. This is a beautiful double bottom formation, and in fact I'll be looking at Nvidia to open long positions very soon. If you're interested in following my trades, I post every single trade in the Discord group. It's a paid group, it's $20 a month, and you get to see every single move that I make. Now let's take a look at the daily chart for ExxonMobil. ExxonMobil is the largest energy company in the S&P 500, and I use it as a proxy to analyze the energy sector because it's the largest holding of the XLE ETF, the S&P 500 Energy ETF. And just look at this absolutely monstrous bearish engulfing candle. A bearish engulfing candle, guys, is a candle that opens above the body of the previous candle and closes below the body of the previous candle. And am I so glad to have gotten out yesterday right around here. In yesterday's video, I explained why I got into this trade right about here and why I took profits yesterday. And it just made complete sense to me because this level right around here looked like really strong resistance to me. Now let's take a look at oil. This is the daily chart for crude oil. And we have this very decisive rejection candle right around here. And it rejected at a really critical level for oil. It shot up all the way to 120 and then rejected down and closed at the lows of the previous trading day. So again, this is the market trying to tell us that it believes that inflation has in fact peaked and it is now selling off oil. We still remain in a very, very bearish context. The momentum still points squarely to the downside, which is frankly all the more reason to get out of the energy trade. Now let's take a look at Bitcoin, and do we love us some Bitcoin action? Now this still looks to me like a bear flag, but again, depending entirely on what happens tomorrow with inflation, we could actually see Bitcoin attempt to rally to the upside. Although I would have to say that Bitcoin has been significantly less reliable than the stock market these past few trading months. Momentum still remains positive, but unfortunately guys, on the longer time frames like the weekly chart, it still looks absolutely terrible. And this is what tends to happen with Bitcoin at this point in its halving cycle, guys. And if we just take a look at this ascending channel, we could still see very significant potential to the downside. I am not in Bitcoin at the moment, but I believe that Bitcoin will absolutely recover in the future. It's just not a good trade at this time. And crypto winters tend to last for quite a long time, guys. I think a good time to look back at Bitcoin would be probably around March of next year. So right around here. Now I'd like to briefly mention the economic events that we have coming in tomorrow, guys. We have the PCE inflation coming in at 8:30 a.m. as well as the core PCE inflation. So that's going to be an hour prior to the market open. So we could easily expect either a gap to the upside or a huge gap to the downside, entirely depending on this figure right here. And the way I intend to play this, guys, is if we see inflation higher than expected, I will be shorting the market, I will be buying puts. And if we see inflation coming in below expectations, I would probably go long on stocks like Nvidia. And that's how I intend to play it. I have just a couple more charts here, guys. This is the core PCE chart, and it does paint somewhat of a positive picture for the stock market because the highest number reported was back here in February, and we've been going down ever since. And in fact, the forecast comes in at 4.8%, which is lower than the last reading for April, guys, at 4.9%. But then we have the PCE, not the core, but the PCE, the personal consumption expenditures figure, the headline figure, not the core figure, which includes things like energy and food prices, is actually expected to go up to 6.7%. That would be the highest reading on record. So if this comes in really any lower than 6.7%, that's going to be very, very positive for the stock market. That's all I have for you today, guys. Thank you so much for watching, liking, and subscribing. I'll catch you in the next one. Bye-bye.